Welcome back. Dipan Mehta, Director at Elixir Equities, is with us. Dipan, good to have you on. So much to talk about. Where do we start? Let's actually start with Infosys, this whole business of the GST demand notice. Do you think the market will be able to keep this aside, separate matter? It'll probably go in court. Or can it become an overhang on the stock and, more importantly, others? Because this is about services that any overseas branch is providing to the parent company here in India.
Good morning, Surbhi, and thank you for having me on your show. I think no amount of bad news is denting the market at all. So this also will be completely absorbed and the street will move on. In the past also, when such large tax notices have come, it's hardly made any effect on the sentiment of the stock or its stock price performance. So I don't think it's going to make much of a difference. But yes, it does bring to light the risks of doing business in India. And all this talk about, making business easier, one needs to review in light of such notices. And this is not the only notice which has come. So many companies have been flooded with GST notices of such ridiculously high amounts that one really wonders, whether these are completely justified. And then end of the day, where the accountability, post such issue of a notice, actually what happened and how was the actual, how was the notice actually resulted, how much revenue for the government. So it's a disappointment, but it's not going to have any effect on the stock price.
It's going to be buffeted on the other side by strong earnings, right? I mean, in-feed numbers were good, and there is this tech rally overnight as well. Nasdaq was up 3%. So if you're looking at day on day, these things kind of become a little relevant. Dipan, out of the earnings, and we got a thick earnings docket as always. What's catching your eye?
See, I think that, the company you discussed, Crompton Greaves, just before I came on the show, very interesting company and reasonable valuations, pretty well managed. And there's an opportunity in this acquisition which they have made. I firmly believe that local acquisitions play out really well. And this Butterfly Gandhimati is a strong brand. It just requires more management input and it will turn around solidly. And eventually they will merge it. There's no doubt about that. They may not keep it separate. So I think that the revival has started for this entire appliance industry, and you can see it across the board in Havells, in V-Guard, in Bajaj Electricals, that the growth has come back after 2-3 years or so. And typically this cycle should last for 2-3 more years. So I'm very confident of that company. Other than that, by and large, results have been in line. I thought I would be disappointed on many fronts, but it is pretty fine. Companies like Varun Beverages, I thought Larsen and Toubro came with exceptionally good set of numbers. Another company which comes to mind, which we perhaps missed out on, was the Zaggle Prepaid, exceptionally good set of numbers, company worth watching, and we are looking to put it on our watch list as well. So there have been a few positives and hardly any major negatives, except when it comes to steel and cement.
Okay, all right. Morning, Dipan, and good to see you. Went well, and you've been quite cautious on steel as well as cement. But I wanted your view on two names. One is Coal India, actually, where the numbers look quite good. And we know there's a tailwind out there because more thermal capacities will come on stream, and it has monopoly here in India. So the view on Coal India and Tata Steel as well, besides the numbers, that tax overhang is something that will weigh on the stock because the Supreme Court has now said that state governments can go ahead and levy a tax as well. And they have said that the contingent liability that they provided for is around 17,000 crores odd. So view on both these two stocks.
Yeah. See, Nigel, I did not know about the 17,000 crores liability. That really is a bit of a challenge. But on the whole, we are not great fans of steel and cement per se. So I would always advise remaining underweight on these companies. Although Lloyd Metal, I thought, is a company worth watching. And that's a pure play, rather mostly pure play iron ore company with exceptional location. And they demonstrate very good execution capability. And I think reasonably valued, and they're doubling their capacity to get the output higher. So within that entire commodity space, I think as a special situation, that company is worth watching. But, it's a dicey business, as one knows. Secondly, about Tata Steel specifically, the results were pretty decent, but on the whole, as I said, steel demand is not as strong as it is perceived to be. Same is true for cement as well. So it's best to kind of, just remain underweight on these counters.
Dipan, I know you like LIC. And yesterday, Gadkariji wrote to the finance minister saying GST, there should be no GST, and stocks responded, no GST on insurance products. Of course, I mean, it's a demand. Stocks reacted. Stocks like HDFC Life and etc. There's, by the way, a call from Bernstein as well on insurance, which came out post-market hours. So just wanted your thoughts there. And second, BSE, which you know very well, also went up 7-8% yesterday. So quick views.
So I think BSE went up because in recent action which was taken by SEBI will perhaps do damage more to NSE than BSE. That's the kind of report that I have got. And on the whole, I think BSE is on a recovery mode. The weekly options have picked up. And there are two camps, one which says that it won't make much of an impact on the volumes. In fact, volumes will go up because contract sizes have gone up. And one camp which says that definitely volumes are going to be impacted. So we'll come to know the truth in a few months' time or so when actually the kind of changes are implemented. But I'll tell you one thing that with markets the way they are, I doubt that such changes by SEBI are going to affect the volumes in the market, and it'll just more and more money will come to the market through the options trading because of higher margins. That is point number one. So I don't think it's going to have that much of an effect.
Insurance, yeah.
Yeah, insurance, I think LIC is more a play on rising stock market valuations and the kind of impact it's going to have on the enterprise value that I don't think is completely discounted.
Got it. Dipan, snappy conversation today. Thank you very much for your time. Appreciate it. We'll